First with breaking.
This is Business Week. Thank you for joining us. I am Frank Omalape. Coming up in a moment, Nigeria and the World Bank meet to discuss economic recovery plans and the bank's support in different social investment projects. Plus, concerns over the high cost of living as the House of Representatives advises the federal government to address challenges. And finally, outside Nigeria, in its latest food security update, the World Bank says inflation and food prices will remain high globally in 2024. This and many more are what to expect on the show today. I am Frank Omalape, and this is Business Week. Thank you for joining us, everyone. Let's begin with the major stories that made headlines in the week. The Ministry of Finance, in collaboration with the Central Bank of Nigeria and the Ministry of Budget and Economic Planning, hosted the World Bank Managing Director of Operations, Ms. Anna Baido, on a two-day visit to Nigeria to strengthen the bank's engagement with Nigerian critical aspects of the country's development agenda. The World Bank Director says it will continue to support Nigeria in implementing its economic reform policies. The Minister of Finance and Coordinating Minister of the Economy acknowledged the bank's support for Nigeria in different social investment projects. And the Minister of Budget and Economic Planning says Nigeria is embarking on the boldest economic reforms in the country.
And discussions over the coming days on the ambitious plans that are being put in place on economic recovery. But also on our program, which is one of our largest programs that we have. We have about 30 projects under implementation here in Nigeria, and it's an opportunity for me to take stock of the progress and performance of our program.
Helping us in the energy sector, provision of electricity, helping us with the social sector, women, out-of-school girls, and so on and so forth, as well as with the macroeconomic support, including social sector support.
Have delivered one of the most boldest budgets in Nigeria's history, in the sense that it is a budget that for the first time literally reduced deficit by over 40%. As well as increased capital spending as a proportion of the expenditure.
The World Bank, to my mind, isn't just a bank that is there to intervene with dollars and cents, which is important, but is also a knowledge bank. And being a knowledge bank, there's so much that countries like us can benefit from having access to a wide range of different experiences and best practices.
And also in the course of the week, the federal government says it will prioritize the domestication and penetration of liquefied petroleum gas and implement measures to significantly reduce the price of cooking gas. The Minister of State for Gas, Petroleum Resources said this at a stakeholders consultative meeting in Abuja. He believes this will ensure the product becomes more accessible, available, and affordable for Nigerians. Elena Samedi Akin's report.
Nigeria is one of the leading gas-rich countries in the world, but the country is yet to unlock the full potential of this economic wealth to the advantage of its citizens. The Ministry of Petroleum Resources convened this industry stakeholders forum to deliberate on policies that will improve efficiency and productivity in the natural gas sector. The minister assures stakeholders of government's commitment to developing an adaptable roadmap that reflects the collective idea of the people here.
We are dedicated to creating a conducive business environment as well as ensuring the completion of major gas midstream infrastructure projects, such as the AKK gas pipeline project, the OB3 gas pipeline project, and the Asanot-Ohaji South Ano project.
Please, a round of applause for him.
Stakeholders at this forum also look forward to an outcome that will be in the interest of growth and development.
When you peg the price of gas at a certain level and does not reflect the amount of investment that has gone into it, it becomes a disincentive for further investment. If we produce gas and sell it, let's get paid for it. At the last count, we are owed something like $1.3 billion US dollars for gas that has been produced and sold in the past. It doesn't create the environment for you to want to continue to develop it.
Let government use independent petroleum marketers to participate fully, because at present we already have the land. Just as I have said, nationwide, all over. If at all this program is to be going throughout the country, definitely independent petroleum marketers must be involved.
This forum is expected to identify problems and prefer solutions to moving the sector forward.
Away from there, the Nigeria Customs Service has taken a significant step towards streamlining customs processes with the launch of its time release study. The initiative aimed at expanding or expediting the release of goods at port and borders. Holds promise for enhancing trade efficiency. TVC News correspondent Ifunanyeze has more.
Nigeria has long grappled with meeting global standards in cargo clearing, resulting in delays and increased costs for businesses operating at the ports. The introduction of the time release study is seen as a critical move to address these challenges and improve trade facilitation.
It is a strategic endeavor aimed at promoting how we facilitate trade, ensure alignment with international best practices, and contributing substantially to national development.
The presence of top officials from related ministries and agencies underscores the significance of this initiative, positioning Nigeria as a competitive player in the international trade arena.
The launch of the TRS aligns with our administration's commitment to promote trade and improve the ease of doing business in Nigeria. This initiative is a reflection of Mr. President's pledge to the global business community that he will eliminate all obstacles and create a conducive environment for businesses to flourish and for them to invest further in Nigeria.
A conducive port environment is crucial for the facilitation of international trade. Efficient custom and other processes are paramount for achieving cost-effective goods clearance.
This concept is rooted in the drive to streamline customs procedures and improve trade facilitation. It has become increasingly important as part of global initiatives aimed at reducing barriers.
Customs Controller General Adewale Adeniyi says he is confident that reactivating the time release study will enable customs to effectively measure the duration from goods arrival at the customs border and port until their release.
We want to reduce the time and the cost of conducting business in our ports. So we want to make sure that we improve efficiency. We want to make sure that we enhance the competitiveness of our ports. We cannot do this if there are obstacles.
The launch of the customs time release study in Nigeria has highlighted calls for more focus on building and maintaining the necessary infrastructure to sustain and maximize its benefits.
And outside Nigeria, the World Bank says inflation in food prices remains high globally. The World Financial Body declared in its latest food security update report that available data on food prices showed high inflation in low, middle, and high-income countries. It declared that the inflation level was greater than 5% in 63.2% of lower-income countries, which was 1.3 percentage points higher than in the last food update in January 17, 2023. It said the inflation level was greater than 5% in 73.9% of lower middle-income countries and 48% of upper middle-income countries, which recorded no percentage change from the last update. The report shows that in real terms, food price inflation exceeded overall inflation in 71% of the 165 countries where data was available. The World Bank's Global Economics Prospect 2024 report emphasized the critical problem of food insecurity within the context of various challenges. And coming up in a moment after this break, our focus this week is on new CBN guidelines on forex market and what this means for commercial banks as the Apex Bank move to cap speculative activities. Stay with us in a moment. Well, thank you for joining us. You've been watching Business Week coming to you from our studios here in Lagos. Let's get into our conversation. The Central Bank of Nigeria introduced new guidelines aimed at reducing the risk associated with foreign exchange speculation by commercial banks. The CBN believes that some banks hold long-term foreign exchange positions to profit from the volatile movements of exchange rates, which can pose risk to the stability of the Nigerian economy. As a result, the CBN has issued prudential requirements that banks must follow, including a limit on the net open position and a directive to sell a excess dollar stock by February 1, 2024. Well, in this context, several questions arise regarding the implications of the new CBN guidelines on commercial banks and the broader economy. Well, for more perspective, I'm joined by the CEO of Wyoming Capital, Mr. Tajuddin Olayinka. He joins me virtually now. Thank you, Mr. Olayinka, for joining us. So let's start this way. What is the net open position, NOP, it's called? So what is NOP limit set by the CBN in its latest circular? What does this mean for commercial banks? I think we should start from there.
Okay. Basically, what trying to achieve with that policy is just to see how they can improve liquidity in the foreign exchange market, and of course, hoping that that liquidity can also come from the banking system. The bank themselves, using their net open position, such that when you have a long position, it has to be 0% of your shareholders' fund unimpaired by losses, and if it's a short position, it has to be maximum of 20% of that shareholders' fund. That would be your short position. So basically, what CBN is trying to do is to just make sure that no bank, keeps an open position, open long position on daily basis. In other words, on a particular day, when they assess you, it has to be named. It must not exist. But let me also say that that does not mean that you cannot have intraday transactions that would be more than that 0%. But they are looking at what you have as your own position. So if it's 0% at the end of the day, at the end of business day, you are fine and good. But within those intraday transactions that you normally have, they expect that you must clear that position before the close of business that day. So that is what is clearly. But some people are saying that maybe you don't even have to hold anything at all. No, within that day there will normally be intraday transactions, which nobody can stop you from. But during that intraday transaction, you must empty whatever you have there before the close of business that day. And then, of course, since you are going to be giving them, daily report or daily return on your activities, that must be achieved by the banks. Then, of course, you're also going to be giving them, monthly report on the same thing. So clearly, what is happening is that CBN does not want banks to keep their long position on regular, to have it on regular basis anymore. Unlike what they used to do in the past, where they will have long position, they will be speculating on what they have there, so that they're hoping to see that to appreciate that improve their bottom line. Their evaluation reserve. So they avoid a situation where banks will actually be speculating. But it looks good. Looks good that that will improve liquidity. So it's something good, but it's not something that it's going to affect the banks by in a way, so that they don't keep foreign currency cash of long position more than a day. At least within that day, it's gone. But for short position, would they always want to have a short position? Because when you say short position, you are looking at a situation where, all those domiciliary accounts of their customers can be accessed. They can borrow from their customers. When you take short position, you're asking me to sell what I don't have. To sell from my customer's position, no longer from my own position. My own position is that is zero, but for my customer position, it can be maximum of 20%. But at that, even at that, can you confirm that in the next 2 business days that these are things that banks will have to look at generally, and even analysts will now begin to see how that can impact the market, because if I sell what I don't have, how much will it cost me to buy it back there to restore that position? So these are the things that investors or those who are actually speculating in the market will be looking at to see what impact it can have on it.
Well, let's look at the implications of these. What are the potential implications of CBN's new forex rules on the liquidity and stability of the Nigerian economy?
Now, the essence of this policy is to ensure that liquidity is improved in the FX market. Now, the question we should ask ourselves is, will that improve liquidity? Yes, in the immediate to near term, it will improve liquidity, because since you ask the bank to sell their long position, to sell it down, to nil their long position, it means that whatever all of them had as at that yesterday, they will have emptied that one to the market. I mean, sell to their customers, especially those of them who are in need of forex supply. So they will have done that yesterday, and we saw the impact of that on the exchange rate. But you see, all these are things that are already part of us, that we know. It's not that the new money is coming into the banking system that we cannot be doing that. So they now have to do their proper calculation to be sure that they are not keeping a position that will, number one, that will contravene the CBN guideline, and number two, that will also worsen their own profitability position. So they don't want anything that will have negative impact on their profitability. So they normally have to do their calculation. But of course, anytime they buy from the market, they have to sell back to that market, sell to their customers in the market, so that they can improve liquidity. It's a definitely to improve liquidity, but I am not too sure whether those forex that they'll be trading on, even on intraday, on a regular basis, will not be coming from the same market that we have. They just don't want a situation where they are speculating with that position. So it's just a very short-term measure. It's not something that we can totally rely on. But once we can attain stability and there's inflow from other sources, of course, that can also help improve exchange rate, and of course stabilize the market, and of course improve activities in the economy, because this volatility has actually helped to worsen the economic condition of Nigeria. So we expect that this will create some improvement, and in the long run, maybe there will be some. It will attract these foreign portfolio investors to now see if they can participate in the market. But what will actually attract them is stability. Would this give stability? We are yet to see that.
This is not the first time the CBN will be coming out with guidelines just to perhaps stabilize the economy. That's the role. But to what extent do you think these new measures will be effective in curbing forex speculation and also to stabilize the exchange rate? Some analysts have said this continues depreciation of the naira. I mean, CBN intervention is beyond just speculative activities. So what are your thoughts on this?
Okay, yes. Well, I also agree with those who say that it's actually beyond the speculative activities. But, speculation is part of it. I think it takes a significant portion in, what is driving those, what is causing volatility in that market. But you see, there are unmet demands both in the official market, even in the black market. And so that's why you see increased activity there. There are more people who have need for forex, and so they go to market where they can get it. Now there's a mistake I think most analysts are making, and even central bank itself is making, in the area of whether they can allow convergence between official rates and then the parallel market rate. Those who patronize parallel markets have different motives. Apart from speculative motive, there are those who have genuine, customer purchase motive. For instance, let's look at a typical importer. He wants to bring something from China, the contact where they normally go and do all those things. He wants to bring some item from China. He knows that if he brings those things from China to official source, using letters of credit, he will need to make certain disclosure. Those disclosures could actually create problem, in pricing those products or in selling those products outrightly in Nigeria. For instance, because of the fact that by the time you start paying duty, pay this, pay that, the landing cost will have been too high to be able to absorb in the market. So what some of them do is that they go to the black market, get what they require from the black market, and then go and do their transaction by understating their invoice. So when you understate invoice, what that means that even there's a way they do it over there. Once you understate invoice, it means that you have been able to save some cost, because it is that same understated invoice that will now be used to determine your duty, determine several other things, both foreign and local. But the people selling, the exporter over there knows that he had gone into some kind of compromise with you. But that does not mean that he has lowered his price. He's still getting his money in full. But for instance, if an item costs, say, $6, he can choose to put it at $2.5. But in the actual sense over there is $6 that is the exporter. But you cannot do that when you are using LC. So, but they do that so that that's why I say there's a forex transaction that are free from documentation. Some of them prefer that, and most of all these importers like to do that so that they can cheat on government, and of course they can also cheat on competition.
Let's look at a few things before I let you go. First, some experts argue that the CBN's concerns about forex speculation lack transparency. Well, I don't know where they got that from, but this is because they said despite its interventions, the pressure on the Naira has continued to mount. So what is your position on this? And secondly, or finally, I must say, let's look at the role of the banks in the middle of the crisis as well, as they have also come under the spotlight of the CBN being accused of holding the dollars to profit from the volatile market. So beyond guidelines issues by the CBN, what are the options to ensure a fair market operations in the FX market?
I would like us to look beyond just mere speculation that maybe the banks are in the market for speculative purposes. I don't think so. But of course, they take advantage of the short-term, price movement to be able to, take in profits that will benefit their, benefit their shareholders, and of course their business as well, improve their capital position. But the major challenge is, if you say CBN has been intervening from where? Intervening from borrowed dollars, intervening from just little that comes from from oil proceeds, intervening from something that something that you cannot really say that something that is not sustainable. You are intervening from a non-sustainable sources. Sources that you cannot sustain over a period of time. And so clearly, we are what is happening, and let me be frank with us, what is happening is that we are already having some kind of a balance of payment crisis. That's the best way to put it. We are having a balance of payment crisis that requires greater intervention than what we are currently doing.
Well, I think we'll have to leave it there. Thank you so much for your time. We've been speaking with Mr. Tajuddin Olayinka, CEO of Almin Capital. Thank you for your time on the program.
Thank you very much. It's my pleasure.
Yeah, thank you so much, sir.
We're watching Business Week. Just before we let you go, let's tell you that business activities gained momentum in January as the Stanbic IBTC Purchasing Managers Index rose to 54.4%, or 54.4 from 52.7, driven by new orders and rates of output. The increase in January's PMI was the highest in over a year, with a significant rise in new business, marking the largest growth since April 2022. All four major sectors included in the survey exhibited improvements in output. The report shows that despite experiencing the sharpest rise in 21 months, rates of inflation remained elevated in January but showed some sign of easing. Also, businesses increased their purchasing activities significantly, resulting in it increased stocks of input as companies benefited from faster deliveries from suppliers, aiding their efforts to procure necessary input. And that's our show this week. Thank you for watching. I am Franco Malape. I will see you again. Bye-bye for now.
Albert Chinua Lumogu Achebe was born November 6,